Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today I have two guests. Jules Salamis is the president and CEO of Integra Resources, who are a development stage mining company focused on the exploration and de-risking of past producing DeLamar Gold-Silver Project in Idaho, the US. And also I have Jason Kosex, who's the CEO, president and director of Millennial Precious Metals, who are building a multi-million ounce multi-asset production company, unlocking value through near-surface heap-leachable gold and silver ounces in Nevada, Arizona. Integra recently merged with Millennial, so it would be good to hear more about this transaction and what the future holds for both companies, or maybe just one company. And obviously, we're here to find out more. So let's welcome George and Jason to the podcast. How you doing, guys?
How's it going?
All good, thanks. All good. Well, it's good to have obviously both of you on. I just wonder if you can both individually just tell us a little bit about your career, about your background, and then obviously we can talk more about the merger and what it means for both companies and what the future holds. So, if George wants to go first, and then Jason.
Sure. Yeah, thanks, Rob. And by the way, you caught us on a great day. This is our first management amalgamation session that we're here in Boise. It's exciting times, right? So we're talking about putting these two companies together and putting two teams together and becoming one. And so we're past the kind of getting to know you stage. Now we're getting to the nitty-gritty of what we need to execute on, and it's fun. It's great to be here in Boise, actually. So in terms of what I do or what I've done for a living for my entire life, I'm a geologist by background. So I've been in the business for over 30 years. Worked around the world, essentially. Started my career working for major mining companies, and I joined the wild west of junior mining in the early 2000s. And it's been a great ride. I particularly like taking unloved assets that were owned by others and demystifying them, de-risking them, if you will, and turning them into something. And I've done that a few times. Of course, we all have a couple of failures in our back pocket. That's just the nature of the game. But I've had more successes than failures, certainly. And so this time around, we've got this great asset that Millennial just joined us on to develop in Idaho, southwestern Idaho, DeLamar. And these guys have some great assets just south of the border from us in Nevada, and I'll let Jay talk about those.
Yeah, how's it going, Rob? Nice to meet you. As well as structural geologist like George, really started cutting my teeth after a very short professional football career up here in Canada. We started in 2009 with a company called Trelawney Mining and Exploration, which we discovered the Côté Gold Project, which is now the third largest gold mine in Canada, and subsequently sold that to IAMGOLD for about $680 million in 2012. Then I was in IAMGOLD's development program for a number of years, going throughout all of their projects. And then in 2015, really joined the Talisker Group. And what we did is we did all the technical due diligence for all Osisko-related companies. So came up with the models for Barkerville and Osisko Mining Windfall, and did a lot of work with the whole group of companies. And then that was sold in 2019 and went out with my other partner, Ruben Padilla, to build Millennial, and really looked up to George and his group at Integra. They've done an amazing job with an Integra 1 and Integra 2, and thought we should join forces to really create the go-to vehicle, really go-to growth story and exploration development vehicle right at the bottom of the market here, because we think we got some really good tailwinds, so to speak, in the gold space. So creating that vehicle that's primed for takeoff when we get a strong gold tape like we do.
Yeah. Obviously, I just obviously recently announced that you're having an at market friendly merger. So why now and why each other? What I suppose attracted your two companies together? And obviously, you're bringing two management teams together, as you mentioned. This is your first strategy session. So why have you two companies come together? And I suppose yourselves heading up both companies. What was that? What was that like for both of you two, and what the reason for you two coming together as well?
Well, I think I briefly just touched on it, and really what we were doing is, frankly, there's just too many exploration and development companies out there. Okay, and we really wanted to create a vehicle that was the go-to vehicle in our space, and to remain relevant from a scale and scarcity perspective in a sector that is frankly not that relevant anymore to especially the generalists in the retail audience. That's kind of the vehicle that we wanted to set up. And George and his team were doing basically the same thing that our team on the Millennial side was doing, is we were literally going through production assets and looking at production assets and being like, okay, well, that needs a lot of capital injection, and we got to fix a lot of problems. There's a lot of risk, and probably, frankly, would blow up either of our cap tables. Then we go down to the permitted assets, and there's very few of those. And permitted ounces in the basin, heap leach ounces go for about 0.89, 0.9 on a PNAV consensus basis. So for our shareholders, we're like, okay, well, if they're going for 0.9, it's tough for us to create value, to unlock value. And then we went down to the kind of the resource development stage, which we were both at, and really try to look at projects that can kind of push 100,000 ounce a year per annum profile. And there is literally probably not even a handful of those assets out there. There's a bunch of 20 to 40 and then about 40 to 70, but north of 70, there's very, very, very few. So George and we've known each other for quite a long time. We met in the Abitibi and throughout the Vancouver community. And we really saw the world from the kind of the same lens, and his team has done an amazing job kind of de-risking and doing all the permitting work, and we were kind of doing the same thing, obviously a little bit behind, as DeLamar is our flagship asset and much more advanced. But it was really nice to kind of do the work with George and his team to get this deal across the line. And there was George and I resolved the social issues right away over a few beers at his place in Whistler, and that was really it. So to answer your question, long story long, but creating the go-to vehicle, growth and development vehicle in the best mining jurisdiction in the world, when we see the space really starting to turn.
And George, have you got anything else to add? Is anything different from that?
Nothing different. No, I agree with everything that Jason said. I think what I would add to it is the power of being not just a one asset company anymore, but a multiple asset company anymore. I think some investors, maybe not all, but some investors understand that being a one asset company can be a good thing, but can also come with a lot of risk. And so having multiple assets to point to just in case if something, God forbid, goes wrong on your flagship asset, you've got other assets to back up your value, backfill your value, if you will, to use a mining term. And while you solve whatever issues happen with asset over here, well, you've got other assets to rely on over here. And so that's a powerful thing from a de-risking perspective, and I think investors should care about that. Then there's the force multiplier effect of having several assets that are in a development cycle, when if you put them together, you're not talking about, in Integra's case, our asset had 135,000 ounces a year with respect to a heap leach production profile, but when we add Millennial's assets to the equation, we're now talking a cumulative production profile of something that looks like 230 to 250,000 ounces a year, potentially subject to further studies, of course. But now we're talking mid-tier producer sort of territory. It's not just a one asset, one offer, one mine, junior developer. We're talking about something substantial, and that's one of the elements that really attracted me to getting this transaction done, Rob.
So what does the merger mean for obviously the combined projects? Is there a staged approach to exploration and development now?
Yeah, that's we always talk about there's really two things that plague development and exploration companies, to be quite honest. And us as a management team, we get paid to solve problems, right? And George touched on one of them is permitting. So single asset companies, it's tricky. So how you mitigate that is you have multiple horses in the race. And from a strategy perspective, and how they are our stage is, develop. We all talk about the Lassonde curve and the valley of the orphan period of the valley. And okay, we understand that. That's a fair assumption. But the beauty is by having multiple assets at different stages, is DeLamar goes into a permitting timeline, a permitting pipeline. And the beauty is Wildcat and Mountain View have only been drilled on basically a 5-acre permit. They're 20,000 acre land packages. So what we'll do is when DeLamar goes into a permitting scenario, Wildcat in Mountain View will add that exploration sizzle, so to speak. So you have continued news flow from the drill bit, resource growth, and really exciting news flow while you're doing kind of a boring, permitting work that retail doesn't really like, but that needs to be done, frankly. So from a strategy perspective, DeLamar is number one. That will go first. We'll submit the mine plan of operations by the end of this year. Then Wildcat will be the next one. Mine plan of operations will be submitted by the end of 2024, and then Mountain View. The beauty thing about this merger is people forget one of the biggest problems we have, and you know this very well, Rob, is people. Okay, so one of the other things that we've tried to do here is secure the top quality assets and secure people. So the really nice thing that this has is, Millennial, we were going to have to go hire a full permitting and engineering team. But now once DeLamar submitted their mine plan, that team goes on to Wildcat, then that team goes on to Mountain View. Same from a build perspective. DeLamar, Wildcat, Mountain View, and then you have this nice water flow effect of cash flow offset and capex as you develop and build out the production profile. So yeah, that's kind of the strategy and the sequencing that we've really kind of envisioned for the company.
I was just going to ask about the skills. Obviously, two companies coming together. Have you basically broaden your skill sets within both companies coming together? And you've obviously just highlighted one area, but do you feel now you've got all the skills that you need to move forward as a company by you two companies merging together?
Yeah, absolutely. So, if you look at the breakdown of the team, and I'm kind of staring at an org chart right now on the wall, but essentially what it is from the Millennial side, advanced exploration skill sets, essentially resource estimation, as we talked about before we got on this call, things that are really scarce, right, in the business. Well, that's one of the elements that MPM brings to us. We've got some great geological talent and talented individuals, but the process of resource estimation is something that we would always outsource to third parties. Now with Raphael coming in from the Millennial side, that's his skill set. He's a PhD resource estimation guru, if you will. This is what he's done for a living for many, many years. He brings that element to the Integra side. And what we bring to the Millennial side as one company is the ability to engineer, suss out metallurgy with our metallurgical team and permit, essentially. And so, there are a lot of complementary skill sets here that we think will work really, really well together.
Obviously, the consolidation theme is something we've heard investors call for a lot recently, which you probably highlighted in some of the reasons why you two companies have come together. What is taking so long for these companies to sort of consolidate and become larger and more efficient?
It's a tricky question, but a lot of it comes down to egos and social issues, to be quite honest. We tried to do a big consolidation a few years back, and that's exactly what it was. And obviously the vision of how people want to progress projects and de-risk projects, some people don't see eye to eye. And that's why it was so easy for George and I to do this, because there was no social issues. We saw the like the world through the same lens, so to speak. And I think that's a big one. And you got to remember too, Rob, is that there's not many once you start peeling back the layers of the onions, okay, there's not many quality projects left. That is, I'll tell you that right now. So that's another one that there's not many of them. And the good ones get scooped up probably too quickly, and then you're just left with the not so great ones. But I think there's a few left out there that once we get a better currency here, we're on a pro forma basis, we'll be trading at 0.15 on a PNAV basis. Once you submit the mine plan, you average acquisition cost is around 0.5, permitted go for 0.9. So once we get that re-rating opportunity over the next kind of year and a half, and we get a currency, there's a few other things out there that look interesting that we can do further consolidation. You got to remember too is one thing people don't talk about is probably saving around $2.5 million a year in just G&A alone, and it would actually grow substantially more if we had to go hire an engineering and full out permitting team on the Millennial side. It would grow significantly. So I think those are really what plagues these things.
I think there's a philosophical question to be asked, Rob, here, which is interesting. It'd be a great narrative for maybe a future podcast, which is who are we as CEOs and executives of these companies to kind of sit back and say, well, no, I'm not merging my company with another company because I'm very comfortable in my seat, or because I've got a certain way of thinking. It's my way of the highway. Well, in doing that, you're doing your shareholders a tremendous disservice. If there are synergies to be had, if there's a growth multiple here that can create value, who are we as CEOs in this industry to say no? And that's something that we overcame in this transaction, as Jason pointed out, pretty quickly. But by the same token, I know for a fact that it's an impediment to other mergers and other consolidation initiatives. Just two CEOs, two management groups, two sets of executives can't get along, can't agree. Everybody's being territorial and defending their patch. Nobody wants to let anything go, and that's not our style.
Yeah, I've just wrote down a quick quote that I've heard or maybe someone famous may have said. Going along, you can only go so far, but going together, you can go so much further.
Yeah.
There's a quote similar to that, but what it's saying is, if you go alone, you can only go so far before it gets really difficult. But if you join forces with someone else, or become part of a network, you can go so much further.
You're exactly right, Rob. And what we saw is there's a big gap, right? You have the Orlas of the world, Calibers that have done an amazing job. And then there's a real big, or K92s, and then there's a big drop to us, Liberty, all the other $100 million, $150 million companies, and there's nothing really in the middle. And by doing this, by the end of the year, we'll be pushing over 7 million ounces in the basin. And on a pro forma production basis, somewhere in the realm of 230, 250,000 ounces a year. And that separates us from our peer group significantly. And that goes to exactly your point. You can only go so far at 100, 130, but do it together. Those companies that do that type of production and then have that resource base, they're $1 billion plus companies. So it goes to your point exactly.
I was going to say, hopefully some people are listening to this and maybe think about, obviously, joint venturing with someone or merging with someone. Do you see what you've done? Do you see more companies thinking about this, or are a lot of companies still reserved and still want to go alone?
Yeah, that's a great question. We've since we announced this transaction, we've actually heard that there are other companies that are considering this sort of initiative now. Yeah, what's driving it? I think it's the funds that own us. They're starting to say, look, all these companies within the pool that we own, you all are going to have to start thinking about getting together, merging together, because there's only so much money to go around, and they won't. Typically speaking, the fund managers will need to follow 20, 30, 40 stocks that they own. Well, they would far prefer to follow just 10 or 15. Makes their jobs easier, and in fact, writing one check to fund these development initiatives rather than writing 10 checks is far easier, right? So the pressure is coming from those that own us, the institutional funds, for sure.
So they're driving this basically.
Oh yeah.
Yeah.
You can hear Joe Foster at Van Eck. He did a great podcast with I believe Kitco at BMO, and very supportive. He runs one of the biggest precious metals funds and the biggest gold ETF. He was very supportive, and he's saying for more companies to do this. And one thing I like doing is having first mover advantage, and being first to the table. I think it helps out a lot. So glad to get this done with George and his team.
Yeah. What advice would you give then someone that could be listening to this podcast, or hopefully listening to this podcast, that could be thinking about being in a position to merge with someone, whether they know that company or not? What are some of the things, or what advice can you give that can put them in a better position or more positive position to then seek that opportunity?
I would say, I think first and foremost, anyway, from my perspective, would be don't be afraid to let go of your ego in this process, right? Just park it. Be open-minded about what your new role could be, and just work accordingly. That would be sort of the top of the list for me. I don't know about you, Jay.
Yeah, I agree with you. Is check the egos at the door. Bigger is better. And yeah, those are the big things for sure.
And what one has the bigger ego out of you two?
I don't know which one of us is an ex-pro football player.
Yeah, I was going to say,
Got you.
Probably me, as the big-headed ex-pro football player. I'd say probably me. That's what George is going to coach me, because he's had a lot more experience than I do. So it's a good relationship. He can put me in my place when I need to be put in my place.
I think that comes from being kicked in the gut maybe a few more times.
The deal's set to close in early May. What are the major catalysts for the new Integra Resources post-close?
So big ones that can deliver significant value creation is one is the updated resource at DeLamar. There's a lot of drilling that didn't go into the last resource, and there's the addition of all of the stockpiles. Like the drilling that we've been doing there has been spectacular. If those were in situ drill holes, people would be really talking about them. But their stockpiles, frankly, they're actually better because the material is already blasted and it's already been taken out. So that'll be the updated resource at DeLamar. Then it'll be an updated resource at Wildcat and Mountain View with a joint PEA. Continued engineering studies and de-risking, and then we'll finish it off with a mine plan of operations at DeLamar. And during that kind of period, we'll do some exploration, some nice step out holes to show a lot of resource growth and kind of stuff like that. Real exploration stuff at Wildcat, through the summer and into the fall. So, at the end of the day, you're going to be combined company north of 7 million ounces and about, 700 million of US NAV exposure in the best mining jurisdictions in the world. How we make money is 0.15 to 0.9 on, you know, $700 million we can in a US. So that's how we create value for anyone who wants to get on the train before it leaves the station.
Yeah. Look, obviously everything seems positive, and you guys obviously get on well together. What challenges can you envisage where there might be challenges in the future, whether that's something that's happening in the macro environment because of this transaction, whether it's the two companies fully coming together? Is there any sort of challenges that you can foresee happening over the course of this year?
Yeah, I think probably the biggest challenge, I don't know how you see this, Jay. The allocation of capital to and prioritization of that is a challenge, but I think if you take one step beyond that, it's access to capital, right? This is a business that has been severely constrained from an access to capital perspective. So we've got a set of plans that we need to execute on to get assets permitted, to get other assets up the curve from PEA to PFS to FS. And, you know, obviously that requires money. That's the gas in the gas tank for all of these perspectives. So I think, you know, in order for things to really start to move here in our business, we need that generalist input back into the investment circle of what we do. They're gone. They've been absent for years. That said, it looks like the landscape for their return is setting itself up quite nicely, which is why, you know, we believe that the timing of this transaction is the right one. It's spot on. But yeah, no, just to answer your question, full stop, Rob, it's access to capital. That's the biggest risk, and it's always going to be for companies like ourselves.
Yeah, he's exactly
right. Jason. Yeah.
But, you know, we're lucky that we have some of the best shareholders in the space, and from the likes of BD Capital and Wheaton Precious Metals. We're very, very lucky to have a really strong shareholder base. And, you know, George is exactly right with the generalist money coming back in. You're seeing, you know, generalists usually had about in their fund about, you know, 3 to 5% allocation, gold allocation. Right now, those generalist funds are a quarter of a point. You know, even if they were to go up to 1 or 2%, you know, that's going to drive these multiples of these exploration and development companies through the roof. So it's a lot less dilutive for us to raise capital and have access to capital. But we're going to need to see that those generalist flow of funds come into the space. And I think you're seeing that, like Societe Generale just came out the other day saying they're going to be 3 to 4% weighting in gold and gold equities. And as soon as you see more of those bigger funds make that pivot, it'll be very helpful for us, and we're going to need to see that.
Yeah. Obviously, gold continues to perform well, but the equities, obviously, particularly with the developers, have not caught a bid. What do you think is preventing the spot gold run from being reflected better in the equities?
Oh gosh, I think that there are a number of factors that are driving the lack of interest at the moment, despite as you said, the run on the gold price. I think people need to see sustained gold prices kind of sitting where they are for a period of time and not getting knocked around. There's a lot of volatility in the general market and specifically within the gold sector as well with the gold price. That said, $1980, $2,000 an ounce is a good gold price. It's a healthy gold price. It's one that, you know, many producers are making pretty good margins at right now. So there's nothing wrong with it. But I think it has to kind of sit there for a while, Rob, and it has to hang in there in order for people to be believers and say, yes, this is we're back into another sort of gold bull run here. We're believers, and we're buying the best exposure that you can get to gold, which is the gold equities ultimately. I don't think we're too far away from that.
Yeah, and obviously, how long do you think a bull run can last for? Especially with obviously what's happening in the monetary system at the moment. There seems to be more focus on gold more recently, and I'd imagine it will have more focus than it has done previously. How long do you think this bull run could actually last for?
Well, if I look backwards, sorry, I didn't
No,
want to
no,
step in there, but it just, I kind of,
You've been through more than I have.
when you think, I've been, as you were asking that question, like, God, I know he's going to ask this question. But I've had to find a new job every kind of 5 to 7 years in this business, mostly due to M&A getting taken over. I've been very fortunate on that basis. So I can kind of point to gold cycles lasting that long, 5 to 7 years. I think we're probably just in the beginning of one right now.
I would
Okay.
exactly agree.
And where do you think that gold price could eventually go to?
That's always a loaded question. If you talk to Rob McEwen, he probably says like $30,000 because the correlation to the NASDAQ and all that sort of stuff. You know, reality, I think if it sustains over $2,500, somewhere in that range, you know, the margins these guys are making, you got to remember, like I think the average ASIC cost with the majors right now is around $1,200. So, you know, even at $2,000, you know, you're making huge margins. Okay. And they're going to have to, you know, allocate a lot of capital and start securing more high quality ounces. You know, you got to remember Barrick and Newmont and Goldfields, you know, they've been declining on a production profile basis for a number of years. You know, they're going to be below, I think for the first time in a while, below 5 million ounce a year production. So they keep on declining, and you know, they're going to have to do something. And once they, you know, with the margins that they're making at 2,500 or wherever you want to see it go, but you know, anything north of 2,000, I think, and sustaining that for a few years would completely change the whole landscape.
Yeah.
And what something that Jason just said, you know, we've just come off of a pretty hectic mining conference circuit, BMO and PDAC and others, and so it's funny because you go to these major mining company presentations, and you know, there was a time 5, 7, 10 years ago where you go to, I won't mention any names, but large scale gold producers, and they would always show this sort of increasing curve of production doing this. Now you go to those same productions, and they're basically priding themselves on saying, well, look how well we can maintain this flat line of production here. At some stage, that's got to change. And, you know, gold prices, I think, is going to be one of those catalysts. It's going to be, you know, the marching order for them is going to be, don't just sit there and collect cash. You know, do something, deploy that cash. And I think that's where projects like ours come into the fold. There's just not many of those around.
Yeah, I was going to say, is there a lot of gold projects out there for these majors to invest in?
No.
But also, does the price need to go a bit more higher to get some of these projects off the ground?
No, I think, like, you know, on a combined basis, you know, our ASIC cost will be around $900. So, you know, even if it were to slip down to 1,500, we're still making really good money. You know, that's the reality. And that's the way you need to build a real business, is that, you know, we can't build a business hoping that the gold price is going to go higher. If it stays where it is or drops a little bit, we are still making money. And that's how you build a real business. And then shareholders get that, you know, icing on the cake, so to speak, as the gold price appreciates. We just increase our margin and increase our free cash flow.
What's the outlook for 2023 for both the you two and both the companies?
Well, I think, you know, like I mentioned to you earlier, it's we and us, and it's you know, we're obviously conditional on the Millennial shareholder vote on the 26th. We'll close the transaction May 3rd, I believe, somewhere around the beginning of May, and then it'll be a heavy list of major catalysts, like I mentioned. Updated resource at DeLamar, including the stockpiles and a bunch of drilling. Updated resource at Wildcat Mountain View, PEA Wildcat Mountain View, a lot of exploration drilling at Wildcat, continued engineering and permitting studies, all the baseline work that frankly delivers a lot of value, and it costs quite a bit of money that frankly other companies don't do. And then lastly, to finish with the mine plan of operations submission for our flagship DeLamar project.
And George, have you got any final words?
Yeah, I mean, as you were asking that question, Rob, what's this year hold for us on camera with you here? I guess the division of roles is well defined. Jason here he's a master at getting out in front of crowds and wowing them. He's also very, very solid from a technical perspective. So he'll be doing a lot of that sort of stuff, focusing on projects both in Idaho and Nevada. From my perspective, this transaction gives me a lot more time to focus on key permitting and stakeholder engagement, which is really a big part of what's going on here in Boise right now, and will be my focus for the next however many years. This transaction actually unlocks my time and my bandwidth to do a lot more of that sort of stuff. So I think that's what the year looks like for us personally as well.
Yeah, great. George, Jason, really appreciate your time. Thank you for giving us an overview of what's happening with both companies coming together. Hopefully, anyone that's listening that may have a thought about maybe joint venturing with someone or or thinking about merging with other companies based on obviously what you've said and the experiences they may be going through. Because I think, as I said regarding that quote, you can only go so far alone, but you can go so much further by coming together. So hopefully that can resonate with maybe some people that are listening to this episode. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? How can people follow your journey?
IntegraResources.com is the website. So we're in the process of putting the two websites together and making one. But that's a good starting point. Their symbol is MPM on the Venture Exchange. Ours is ITR on Venture and ITRG on the New York Stock Exchange. Okay,
great. We can include those in the show notes that accompany this podcast episode. Wish you well for 2023 and beyond. Perhaps you can come on later this year, next year. Let us know how the merger actually went. And obviously some lessons that you can, maybe some things you might be able to do better. And hopefully you can educate the audience if they are in a position to consider looking at merging with someone. Perhaps you can obviously come on and give us some tips on how to maybe do things better. So yeah, it'd be great to see how you guys go.
Happy to do so, Rob.
Awesome. Yeah. Nice to meet you, Rob. Thank you very much.
And yourself. Thank you for listening. Hope you enjoyed that episode. There's a lot obviously to take away. Hopefully you gain some ideas if you are in that particular position. If you want to reach out to either George or Jason, then obviously look at the show notes accompanying this to ask any questions that you may have. Please pass this episode on to others. Appreciate your continued support. Obviously share this amongst mining people within the industry, but even people outside of the mining industry, because we want to educate people not just in the mining industry, but those that don't know anything about mining, because we need to improve obviously the brand image. It is, I suppose, an image that does get tarnished, but we want to try and educate as many people as possible. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.